We are even I can trade. You will be assimilated. Your trading knowledge and distinctiveness will be added to our own. You will click the like button. You will subscribe to this channel. You will share this content with at least one other friend. Resistance is futile.
Welcome back, Even I Can Traders. What's going on? We are back. Today is January 17th. Currently after hours. I didn't get a chance to record. Today is a very busy day for me. But I'm sure you don't want to hear about that. Let's talk about these trades, right?
Your assimilation to the collective will begin by joining the Even I Can Trade Discord. Link in the description of this video. You will join a tier based on your distinctiveness, or you will join the general area with no economic impact. Excuses are irrelevant.
So, let's see. Here is the SPX. Today's action. It was a very nothing day for the most part. We had our kickoff, and then the Empire State Manufacturing Index came out. It was really negative, actually, very negative. The most I think it's been all year or all last year. So we got not only bad news on that, but we also got to bounce off of our long-term support. And again, for those who have not been following me, this support goes all the way back to like January 4th of 2022. This red line right here, acting like a big red roof on top of us, right at the 4,000 level, which is another psychological resistance area for the market. So this is a super strong area of resistance right up in here, that has been very reliable, I'll say. And if we take a look back on our daily chart and clean it up just so you can see right here, January 4th, 3rd, whatever, this line persists all the way back through. Then it's the market's bounced off it every single time for a year. So we're back to battle this line one more time. I don't think the market is going to win yet. I don't think the market is going to win this battle until we get a catalyst, or at least until February. But we've got some other numbers coming up that could power us through, but I don't think without those numbers we're going to have enough juice to power through this wall right here, or this roof that we have. But we've also got a floor down here waiting for us as well, but we're kind of far away from that right now. But I kind of think we're going to test this floor at some point before we continue higher. But I don't think it'll be until, we get way out here somewhere where the floor is much higher, because that floor is rising. So that's where we're at. But back to today's trade, just to show you what I saw, why I placed these particular trades. I was a little bit mad at myself for this particular trade, because I saw this particular trade. I entered right here on this green bar. Let me widen this out a little bit. I entered this call spread right here, right on this green bar, but I was trying to test my patience, or exercise my patience. I saw pretty much all of this form right here, and I saw this kind of start to sputter out once we got to this area. Now this line is not an exact science. This is just what I drew. So the line could literally be higher or lower. I don't know. It's probably different on everybody's desktops. Even in my own Thinkorswim, the line is a little bit higher. But when I saw it starts to sputter out around this area, I knew I wanted to go ahead and get into the market at that point. I was just trying to wait for confirmations like I teach you guys, because I don't want to be a hypocrite. So I was waiting for stochastics to come back around. I was just waiting for all of my normal confirmations, but I already knew that I wanted to get into the market when I saw this. So I was just waiting for all of those confirmations, because I did not want the market to give me the middle finger like it always does when I get into a trade. So the market came down. I was waiting for like a lower low or some kind of something where I could detach and make an argument a cogent argument to go ahead and get into the market, but I just didn't have one because we had this big bar earlier right here taking up all of the oxygen out of all of my stuff. So the only thing I could really wait for was the stochastics to come back down to the level, and that didn't happen until this red bar. Now this red bar was deep, so at the time it got all the way down here. Let me do this up a little bit more so you can see, and we can get in there. So this red bar came all the way down to this level right here. And I was like, oh my God, I missed my opportunity because I had this trade lined up. I was at 40-40 or whatever it was. Yeah, 40-40. I mean, was that my trade 40-40? Maybe, I guess. I don't know. But, you know, I saw the bar all the way down here. I was like, oh my God, I missed my trade, but patience again. But then I was kind of upset because I was like, maybe I'm being too patient because I missed out on all of this glorious red right here that I could have, you know, the market could have just been falling away from my position the whole time. I really wanted to get in on this bar. That's clearly too early, but, you know, I missed out on all of this. Am I being too patient? No. Let me be more patient again. And it's honestly hard to be patient because you know theta is working and theta is coming to strip away all of your premium. So you have to keep that stuff in check, I guess. But I was patient. I waited out this long bar when it got back down to here, and it bounced back up like a rubber band and got up to here, and I was able to catch this green bar to put on my 40-40 trade. And it's up there so you can see how far away we were. Went ahead and drew my risk line and went about my day, set my alerts, and I said, I don't know if I'm going to get into a put because I got 20 cents for this trade, which is my goal, so I didn't have to really push. So, I mean, my day could have been just done right here, but I was like, it's kind of flopping around right now. It's probably going to try to flop around this 4,000 level because the market really thinks it's going to get above 4,000 and it's just not. So it's probably just going to be flopping around like a fish. So I wanted to go ahead and get in a put trade and make an iron condor. But I didn't want to get in right here. So, again, waited for confirmations. I saw all this stuff form, but I did not want to get in here until we got like a higher high and also confirmation on the stochastics again. So this is again, me being patient. Wait, don't fall for it. So we broke this little trend line kind of like right here on that green bar. So this is eyes open. Now we have to wait for an entry point. It's still going up, and then we have this little fallback right here. And I was like, that's enough. All right, let's just get in because theta's starting to hit. It at that time was like 12:30. So let's just go ahead and get in. The market's flopping around. It's not doing too much. I can get a pretty decent trade off on the put side. With some decent protection. I've got a pivot right here in the way. I've got some decent distance, not as much as I want, but we've got some decent distance. And there's evidence that the market wants to flop around. So let's go ahead and get in. And the market did exactly that. It wants to pretend like it wants to run up to 4,000 and shy away. So keep on doing that, buddy. Keep on. As long as you keep doing that, I'll keep selling iron condors and racking up. So that was our day. It was like the perfect iron condor day, even though our condor was smaller than what we like. I like at least 100 wide condors, and this was like an 85 point condor, so we're 15 points shy of that. Probably could have got 100 points if I traded a little bit earlier, but you know, nobody's perfect. No trade day is going to be perfect. It worked. It's fine. So that was the trade day. And trying to do all of this while working and setting up for a seminar and having to take the car to a dealership and all that kind of stuff today. So I really do advocate this strategy for those of you who have to work and have a lot of stuff to do. If you have any kind of daylight throughout the day, where you can kind of poke your head up on at stuff, you know, this is a pretty decent strategy to make some decent gains while you have to work and while you have other responsibilities. It's not perfect. So like if I was working in retail or I was working in front of people or something like that, probably not the best, But if you have any kind of situation where you can poke your head out from whatever you're doing every once in a while, I'd say this is a really decent strategy for that. Now, my overall thoughts on the market really quick. I think I'm bearish right now. I really am. I know we're kind of on a bull run right here, but it's starting to flop over a little bit, if you ask me. So if I go from, just look at this little trend line right here, we kind of broke it at the end of the day today. So I mean, we'll see tomorrow. For it to hold this trend, in other words, we're going to have to break this year-long resistance tomorrow by like noon. And save for that, I trust this resistance line more than I trust this right here. Okay, so I just don't see it happening. I think tomorrow is going to be the beginning of a little bit of a pause in the market, a little bit of a rest, probably retracing down to the 3950s, something like that, in my opinion. I just don't see it continuing to rise at this rate beyond this resistance line right now. Now, as far as a catalyst that could make that happen, there we go. Like, look at this Empire State Index right here, minus 32. This is the manufacturers. This is basically a survey of manufacturers that are ordering business stuff, business conditions, how they feel about business right now. Minus 32. We had a minus 31 in August. I need to go back and look and see what that did, or what happened after August. Well, we know what happened after August. The market went down. But I mean, we haven't had a minus 32 since like 2020, like COVID stuff. Like, this is COVID level stuff. And I was kind of surprised to see that, because a lot of the other I don't know if this is the tail wagging the dog or not, because everywhere I look, recession's coming, recession's coming, recession's coming, recession's coming. It's like all of these people predicting recession's coming is making me think that recession's not coming. Because if everybody knows that it's coming, then it's like, okay, well, then we know, and everybody's kind of preparing for it. Everybody's like gearing up. So like, if everybody's gearing up for it, is it really even going to come? So I don't know, man, but this right here kind of swung me a little bit more into that column. But all the other news hasn't really even been that bad. This could be a function of interest rates finally catching up, because if you don't know, interest rates hurt the ability of businesses to borrow, and businesses not being able to borrow means they can't invest in new stuff, invest in research and development, invest in hiring new employees, building new stuff, tooling out new manufacturing lines, all this kind of stuff, buying more inventory, yada, 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 yada. It just makes everything, it really does slow everything down. It affects the housing market in many different ways, all that kind of stuff. So this could be just a function of interest rates finally starting to catch up, because these interest rates have risen really, really fast. So it takes time for some of those effects to permeate through the economy. So this could be a function of that. I don't know, but this is really bad. Anyway, we've got PPI coming up tomorrow. I think that unless this is a really positive reading, I think this is going to be the market's excuse to go down. If it's neutral, if it's expected, if it's whatever, I think it's going to be the catalyst for the market to go down, the excuse for the market to go down. Unless it's like green, like super green, then it could push us above that resistance. That's what I think. Let me see what else. Yeah, let's take a look at our account, because that looks good. We crossed 900, whoop whoop, 902. We're almost to the point where we could put on 2 contracts. So I don't have to wait till I get to $1,000 to put on 2 contracts. I can really do it right before that. Probably, I might be able to do it now, actually. it's possible I could put on 2 contracts. I'm right at the edge of that. Like a few more dollars will put me in there, but I probably do need a few more dollars, like another $40 or something like that. And we should start being able to put on 2 contracts instead of 1. That'll be fun because then we can start growing at a faster rate, but we have to be more careful, of course. So we don't want to lose our shirt as soon as we start growing. And in that vein, I might even wait a little while. I don't know. I might pick and choose to see, like, if I feel really good about a trade, we'll put on 2. But if it's a little bit more shaky, I might just do 1 contract. I don't know. But I don't want to make this too complex. That's another thing, because you can start getting really complex with this stuff and start placing trades all over, and place 1 trade early, 1 trade midday, all this kind of stuff. And it's just more stuff to watch. Where you could just place 1 trade and be done with it. I prefer that personally, just because I'm always trying to think of how this trading looks in the life of a person who's not sitting in front of their trading screen all day. Somebody's trading from their phone. Somebody's got stuff going on. Somebody's got the phone ringing, the kids crying. You got to cook dinner. You got to do this. You got to do that. I'm trying to think of it from that standpoint all the time. So my goal is to be like 2 trades a day, in, out, done. Maybe a closing trade towards the end of the day once it works. Maybe if you don't set it up automatically. That's like my goal for this whole thing, right? So, but I'll leave that to other people. But the goal of this is to keep it simple, trade 1 thing, make money with 1 thing, get used to 1 thing, and master that 1 thing and that 1 trade and be done, so you can move on with life and not sit in front of this thing. So that's our count, 902. We made 30 today. I think it was 20 on the call and 10 on the put, because I was a little bit more careful with the put because I was more bearish and still am more bearish in my thinking right now. But that's where we are. Also, I have made an update to the spreadsheet, under the tools section, the trade tools down here. I actually added a profit expectancy calculator. I came across this calculator when I was doing some research for the Discord. And this equation right here is going to tell you your profit expectancy under these conditions. So the way that you're going to look at this is you're going to enter your expected win rate for your strategy. Mine is about 95% at where I'm trading right now. Your typical win size. So I actually started out with 20. I was looking at condors, but I actually started out with $20 just for a regular old put spread. This is automatically calculated because it's just math off the win rate right here, your loss rate. $200. This, I was trying to think of the max loss that I would take before I just shut down the trade and forgot about, just like, okay, that's enough. Let's shut down the trade. Let's get out. About $200 off of a $500 risk is the max that I think that I would go. And I'm trying to be realistic with myself. Now I can adjust this and say, okay, where should I go? But where will I go right now? $200 is the max, right? And then how often do you trade? So I'm saying there's about 250 trading days a year. I'm just saying, like, what if you trade 220? You take some days off, whatever, skip days, whatever, just the day doesn't shape up. 220 realistic trading days. And this is not calculating growth. This is just a straight, you stay at $500, you stay at $20 per win, all that kind of stuff, right? So the thing here is, do you have a positive profit expectancy? Because the thing is, it doesn't matter what your win rate is unless it's 100%, which is impossible. Other than 100%, your win rate doesn't matter if your loss size is too big. So if I change this 200 to say 1,000, then my expectancy is negative. If I move this to like 99%, it's still big. But if I move this to like 10,000 or whatever, then, I'm wiped out, right? 10,000, even 10,000. I'm wiped out. 5,000, I'm probably wiped out. You know what I'm saying? So this is a good thing to see, like, okay, is my risk management tight enough, or maybe even too tight? How tight should my risk management be? Because the tighter your risk management is, it's going to affect your win rate. So it's like this big old juggle, right? So I find for myself 95% and a $200 max loss size max loss is good. Now if I tighten this up to say 100, let's say I move up my risk management to 100 and lower my win rate to say like 92%, you know, okay, so I could play around with this and kind of see what makes sense for me, right? But I find this right here is decent for me. Now I'm not saying that I'm always going to take a $200 loss. I'm going to try to roll and get out of stuff and all this kind of stuff. But I'm just saying, if you're backed up to a wall, this is the max that I'm going to allow myself to lose, right? So I thought this was pretty cool to take a look at. Did I make any other changes to this? No, this is pretty straightforward. Let's see. What else? I think all this is the same, and all this is the same. So all that stuff is there. The Discord is up and running, and some of you guys are really shy, but come on in the Discord, check it out, and I've got all the stuff here. One thing I wanted to mention is the Patreon bot. If you want to join through Patreon, don't, because the Patreon bot is not working correctly. Like, I've had a couple people join, and what's supposed to happen is you link up your Discord through Patreon, and there's a bot in here somewhere that is supposed to assign you your proper roles so you can see the right rooms that you wanted to see. But the bot is not assigning any roles. It's just sitting there asleep for some reason. So what I want you to do instead is just come directly to Discord and just subscribe straight through Discord. This is going to make sure everything works for you, and it's going to work just like Discord would. So Discord is it's going to work just like Patreon would. So Patreon is kind of like a third wheel at this point, based on the way I'm doing it right now. All of this stuff is new to me, so I haven't set any of this stuff up before, so I'm still trying to get everything situated. So I appreciate your patience with that. But if you are going to join through the Discord, and use these plans instead of the Patreon rewards, because I want you to go ahead and right away get access to the stuff that you should have access to. And Patreon's not doing that right now. So I've messaged them to try to figure that out, but just do it through here for now. It's fine. Other than that, we're here waiting on you guys to come on through. We've got some people that are placing trades already using the strategy. I've got the news flowing right here. I do plan to add some popular traders' Twitter, their Twitter mentions and stuff in here somewhere as well, to keep us up to date throughout the day. Because I want you to I want everything to be simple. I don't want you to have to go to a million places to find everything that you need. I want everything to just kind of be like right here. So we can talk to each other and help each other out with these trades. So that's where I'm at with it, guys. That will be it for January 17th. The link for the Discord should be in the description as well. Thank you for giving me your attention. I really appreciate it. And hopefully we will see you at $1,000. Talk to you soon.